Hi. This week, we will be covering the topic higher time frame pivot analysis. This topic is also taken from the book Secrets of Pivot Boss by Frank Ochoa. Don't forget to add your email ID in the comments section for a free copy of this book. Introduction to higher time frame pivot. Without a doubt, higher time frame pivots can be as explosive and reliable as intraday pivots. It's much more valuable due to the fact that the resulting moves are vastly larger, thus significantly more profitable. Two-day relationship, such as outside value, overlapping higher value, lower value, higher value, etc., also works well in higher time frame pivots. Therefore, instead of capturing multiple intraday moves in a day, you could capture just one or two moves for a month or year. Types of higher time frame pivots. The three major types of higher time frame pivots are yearly, monthly, and weekly pivots. How to add higher time frame pivots in TradingView.com. Open TradingView.com and open any stock chart. In this example, I have selected the Nifty Index chart. Click on the Indicators tab from the list and search Yearly CPR. Select CPR by VSD from the list. Your chart will look like this. Don't worry. Click on Settings and remove all unnecessary lines. If you are using monthly pivots, then keep only monthly pivot details. The green lines are monthly support and resistance levels. Why higher time frame pivots are important? Higher time frame pivots are important because they inspire different types of market participants to enter the market. Namely, weekly pivots inspire swing traders to buy or sell. Monthly pivots offer a call to action to position traders. And the yearly pivots trigger investors' participation. Task for the week. Add yearly CPR indicator in the stock chart and check how the stocks are reacting to the central pivot range in weekly, monthly, and yearly time frames. In the next episode, we will take a closer look at yearly pivots. Stay tuned. Thank you for watching.